Good morning everyone and welcome to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, we have to put somebody in the spotlight, and today there is no other company with better credentials, Santo, than Nykaa. Of course, a bombshell news coming out from the company yesterday that the company's CFO Arvind Agarwal has called it quits, and it comes as a surprise given the fact that it comes on the back or just weeks after that, the company announced that very controversial and what appears to be at this point of time a very ill-advised bonus share issue of 5 for 1. If you look at the entire controversy around that, people have raised issues whether it was a really nice thing to do, given the fact that the company's shares were going ex-bonus just a day before the lock-in period was supposed to end for pre-IPO investors. It has raised concerns over management becoming too acutely focused on stock price instead of focusing on what they are really hired for, and that is the business and the day-to-day running of the company. That said, of course, this is not the first big exit that has happened from the company. A few months ago, the CTO, the Chief Technology Officer of the company, had also resigned, but they were able to replace him with an even better candidate, somebody with credentials of working with Amazon and the likes. And clearly, I would expect, Santo, that Nykaa should be able to replace, Arvind Agarwal with somebody with, if not equal, maybe even better credentials going forward. So on that front, I am not too worried. But of course, at this point of time, the stock really is in the doldrums. There are now question marks. What was going for Nykaa was the fact that it was probably among the the only profitable company among the new age tech startups that I listed last year. But the concerns around corporate governance that have been raised because of the bonus share issue, that is something that has left a bitter taste in a lot of investors, and I'm sure Santo would have more insight on that, and he's going to use that stick to beat me probably. But overall, Santo, I think if you look at it from an earnings point of view, a lot of people have been saying that even the earnings have been seeing a little bit of a slack, largely because the company has now entered an investment phase. They are investing quite heavily in their fashion brand. They are trying to crack a market which is quite competitive at this point of time, even if you look at the fact that there is a lot of migration happening in market share from unorganized players to organized players as far as the fashion retail is concerned. Overall, going ahead, I think the situation will remain a little weak for Nykaa, at least for the next 6 months. I think the main trigger for buying in this stock would probably be the fact that when global interest rate peaks, Santo, I think that would be the time when you will start seeing a bottom happening in Nykaa, largely because of the fact that a lot of these startups which have a long duration or long tail for growth, whose cash flows may come far ahead in the future, they tend to benefit in environments where interest rates are lower. And given the fears of a recession probably later in 2023 in the US, and the US Federal Reserve's cutting interest rates by November, I think you will start seeing the market factoring that in probably somewhere around March and April. And once that starts to happen, I would expect that tech stocks like Nykaa will again come back into investor fancy as they were throughout of 2020 and 2021. Also, Santo, just another part which was very interesting yesterday, that block deal that happened of Lighthouse India Fund, who sold up about 1.8 crore shares, I think, in the block deal. One interesting name that has picked up that stake is ICICI Prudential Mutual Fund. Now, if there is anybody who is a flag bearer for the value gods in the Indian mutual fund industry, it is ICICI Prudential Mutual Fund, after, of course, HDFC Mutual Fund. And given the fact that they have entered Nykaa, after exiting Nykaa at probably at the record high prices that the stock was quoting back in January 2021, I think this could be an indication that maybe value has finally emerged on this counter.
Well, CJ, you almost said it all. Now, I really don't know what to say. You played on both sides of it, but that said, short points here. The last point that you mentioned about interest rates and the relation with tech stocks. Now, in this case, interest rates are still continuing to climb. Now, if you notice, the Fed has said that it will slow down the pace of rate hikes. So, instead of 75 basis points, it will be hiking it by 50 basis points. But the rate hike is still not done with, and I don't think so it will be done with till the Fed can say with conviction that now inflation has finally been brought under control. And that said, as long as the Fed continues to hike rates, you could see interest rates in other parts of the globe to trending higher. So that is on the interest rate part. The next part is definitely valuations. Now, for the last couple of quarters, both the June quarter as well as the September quarter, the company has reported what, a net profit of just about 5 crores, right? The margins are under severe pressure. Now, you may say that they are in an investment mode, that's why the margins are under pressure. But then that said, clearly at this juncture, the market doesn't seem to be in a mood to kind of give higher valuation, premium valuations, where they are very doubtful whether the numbers will be met and where the numbers are far out in the future, as you just said. So that could go against Nykaa in the short term. But that said, enough has been said about the controversy over bonus shares. There's nothing really wrong in the bonus share. I think where the company then got it wrong is then trying to time it with the end of the lock-in period. The change of the record date is where I think they probably have got it really wrong, because that then made the intent a bit suspect. They could have gone ahead with what was, and then probably the market really wouldn't have taken notice. But that change, that is like really what's got the market chatting.
Absolutely.
At the end of the day, bonus issue doesn't make a difference one way or the other. But this timing has really, I would say that changed perception about the stock, at least among the bigger investors. And the market is very unforgiving if it feels that the promoter is trying to shortchange them in any way.
Well, there are many companies, I think, Santo, that can attest to that view in the market. But I think what I really find interesting, I mentioned that earlier as well, is the entry of ICICI Prudential Mutual Fund, because let's not forget that they were among the anchor investors in the IPO, and when they exited after 2.5 months from the stock was quoting at a near record high. So they ended up almost doubling their money. And given the fact that they have now they've chosen to enter at such depressed prices, it just gives me a little bit of hope that maybe, S. Narain is seeing something in the stock that probably the rest of the market, because of the noise currently around Nykaa, is probably ignoring or is not able to see. So it will be very interesting to see whether institutional investors start to separate the wheat from the chaff in that sense, and whether value finally is starting to emerge for a newish tech startup like Nykaa, Santo.
Well, and that said, let's move on to the market setup for the day.
Well, Santo, the market setup is looking a little positive actually. It's quite good. If you look at the SGX Nifty futures, they indicated almost a 50 to 60 points up move on the Nifty this morning. Aided by, of course, very strong cues emerging from Wall Street overnight. Benchmark indices there rallied quite sharply, led by, of course, energy and material, companies, basic material companies. But the one point that really nags me about yesterday, Santo, is the fact that although our markets did close higher, we slapped a 3-day losing streak. FIIs continue to be net sellers for the third consecutive day in the Indian stock market, which clearly now goes against this theory that, FIIs have finally come back to our shores. I think at this point of time, nobody with conviction can say that foreign investors have finally come back after what was a tremendous amount of selling for 9 consecutive months, from October, November last year till about August, September this year. So that should be a little bit of a dampener as far as the bulls are concerned, because if you want this market to go back to record highs, you need that help from FIIs.
Definitely, but I don't know, CJ, how reliable now these FII flows, in the sense that if you can directly pinpoint them to the movement in the market, simply because a lot of them are also hedges which probably are being unbound. So that perhaps could explain the fact that on some days when you have seen heavy FII selling, you still seen the market go up. So well, that's about it. That's about the FII part. But on the other hand, CJ, even though indices are close to their record highs, I don't think really there is much cheer on the street. That's because mid and small cap stocks, most of them have not made any meaningful returns, unless you happen to be in the really correct stock which has moved up like 40 to 50% this year. Your portfolio is pretty much flat, if not negative. So that clearly I think is a big dampener. So the market may continue to hit new highs, but again it will be very narrow, led by a handful of stocks. That's not really going to make investors cheerful. Now, quick look at the FNOQs. You're seeing short covering in futures of Rain Industries and Hindustan Copper. There's been some short build up in futures of IEX, Intellect Design Arena and Birla Software. Now, short build up in Intellect, IEX and Birla Software Similar was the trend yesterday as well, and on Monday also. So that continues, and we are seeing some bit of long build up in L&T Infotech. That trend too is continuing. Besides that, JK Cement, Alchem, and Bank of Baroda.
Well, thank you for those FNO cues, Santo. Moving on to the newsmakers of the day, and the first one on my radar today would be a debutant, Inox Green Energy. The stock will be making its debut on the Wall Street at 10 a.m. this morning. But if you look at the grey market premium, clearly that is indicating a very tepid listing as far as the stock is concerned. Also, after very muted demand as well for the IPO, there was not really much demand out there for the company's IPO, and I think one of the reasons for that was largely the fact that the financials of the company were not really that attractive. If you look at the recent financial performance, that has not been great. It has a high dependency on its parent Inox Wind for a lot of its business, and that were probably the major discouraging factors as far as investors are concerned, and that is why we might see a tepid listing from Inox Green Energy this morning.
That's it. Let's quickly take a look at the market. Sensex up 155 points, Nifty is also up by about 70 points. Strong market breadth. 1400 stocks up and 300 down at this point. Nifty mid cap is firm in early trade, up 0.37%, and similarly Nifty Bank is also up close to about 0.4%.
Yeah, Santo, sectorally, I mean almost all sectors at this point of time quite a strong start for them. Nifty Auto Index higher by about 0.5%. Nifty Metal Index doing again quite well after being the top gainer yesterday. It's higher by about 0.4 to 0.5% this morning. And even Nifty Realty, which actually gave up about 1% of its value, is now higher by about 0.3% in trade. So clearly doing quite well. And no surprises, Santo. I think the India VIX index is actually down quite sharply this morning. If we can have the VIX on our screen, clearly an 8% downtick now, 12.7. So clearly market is very, very comfortable at in the position that it is. It's really not fearing any sort of drawdown, and that you can see from the fact that the India VIX is falling, and that basically means that traders out there are not buying hedges. They are not buying put options on the index to hedge themselves against any sort of a sharp drawdown or a 5 or 10% cut on the market.
But typically, when you see traders getting complacent, that is the time when
absolutely,
you should be
absolutely,
cautious.
And I think we mentioned this, Santo, in our show last week as well, that whenever the VIX moves below these territories, basically in the next couple of months it tends to top out. So we will have to wait and see whether that happens or not. Coming back to news, because Santo?
Well, DCW is my newsmaker for the day. The company has said that it will double its chlorinated polyvinyl chloride capacity by adding another 10,000
Those are a lot of words.
Yeah, 10,000 ton capacity. Now the stock has hit a multi-year high recently, just about a few days back, and since then it has slipped by close to about 8%. Average set of earnings from the company, and overall the outlook on the chemical sector in general remains a little cautious at this point. And with that, we move on to our hot brokerage bets. Minus Maruti by UBS. UBS has rated the stock a buy with a price target of 12,000 rupees.
Wow,
now, according to UBS, the real world driving emission norms, which will kick in from April 1st, 2023, now that's going to see an increasing shift away from diesel cars. Now, diesel cars in India account for about 33% of the total cars in the country. Interestingly, Maruti has zero exposure to diesel cars at this point in time.
So they discontinued diesel manufacturing quite some time ago, I think 2-3 years ago.
Yes. So any shift from diesel towards petrol, it will be incrementally positive for Maruti, and that's the view of UBS.
Well, Santo, that is a very interesting thought coming in, and I mean that price target is mind-boggling. 12,000 rupees for Maruti Suzuki. Clearly, given the fact that stock is sitting somewhere around 8,800 to 9,000 at this point of time, indicating a very strong up move as far as UBS is concerned. That said, the top brokerage bet for me today would be Hindustan Foods. Swastika Investmart has come out with a technical view on the stock. They have given a buy rating with a target price of about 814 rupees. Now, according to Swastika, the stock has seen a breakout in technical charts after a long-term consolidation. Even on the daily charts, has made a flag pattern, which generally is an indicator of a bullish cycle coming in for the stock. Now, of course, the stock had hit a 52-week high not so long ago, but since then had corrected. But it has found support at the breakout level that it had earlier, which was around the mark of about 570-72 rupees. So clearly, Swastika is of the view that the next leg of rally or bull rally on this stock has now commenced, and they're expecting the stock to rise to 700 rupees, which is the first resistance. And once it breaks that resistance, they're expecting the stock to rise to about 814, which will overall mean about a 25% gain in the coming weeks. That said, the brokerage firm has recommended that traders should be keeping a stop loss on the stock at rupees 560 rupees going ahead, Santo.
And with that, we move on to the stocks on our watch list this morning, starting with Vedanta. Now, the company has announced its third interim dividend of about 17 rupees 50 paise. Before this, the company had given a total of 51 rupees as interim dividend already. So, pretty strong dividend payout there, and that indeed makes it Vedanta one of the best dividend yield plays at this point in time. So, the stock is close to about 255 odd, and it's given out about 68 rupees of dividend. So, a very good dividend yield play there. But more than that, CJ, I think at this point in time, what the market appears to be more worried is about the outlook on commodity prices, and that is probably, I think, what could prevent big upsides in the Vedanta stocks. Maybe the dividends will provide some kind of a cushion at these levels, but the big upsides still look very unlikely. Citi is among the brokerages which is bearish on Vedanta. It has reiterated its sell call with a price target of about 235. Now, according to Citi, the outlook on the three key metals where the three key commodities where Vedanta has an exposure, which is zinc, aluminium and crude oil, the outlook on all three in the near term is definitely very cautious to bearish. Things might start looking up from about FY24, but in the short term, the outlook for zinc, the spot price is around close to 2,540, but Citi sees a price of about 2,300 for zinc. Similarly, the spot price for aluminium is about 2,300 currently, but Citi sees aluminium prices at around $2,000 per ton in the short term. So, clearly things not looking very bright as far as the outlook on commodity prices go, and besides that, Citi has also flagged the fact that the commissioning of captive coal blocks by Vedanta, that could also slow down a bit. So, that is not going to ease pressure on margins anytime soon.
Well, Santo, despite all, I mean, the correction in commodity prices, nothing new has been happening now since for a good part of 4 months. And despite that, you know, if you look at the second quarter performance of Vedanta, the operational performance of Vedanta, that was still quite stable and steady. I mean, you did not see a very massive deterioration in many of the operating metrics of Vedanta. Also, if you look at the volume growth for zinc and aluminium, that was actually still quite strong in the second quarter, even though realizations did fall. But clearly, there is a good amount of dispatches or offtake happening for aluminium and zinc for Vedanta. All the volumes for crude oil did fall in the second quarter. That said, I think going ahead, the view for Vedanta is the fact that this is a company that will continue to generate a high amount of cash over the next 2 to 3 years. It is already also getting a huge amount of dividend payoff from Hindustan Zinc, which is a subsidiary where Vedanta holds a considerable stake. So, going ahead with cash generation levels so high, there is a very good likelihood that the company will continue to pay out dividends in excess of 50%, if not more, till at least 2025 or even 2026. And a view coming in from systematic, brokerage or systematics is that Vedanta so far in the past 18 months has outperformed Nifty. And there is a very, very strong likelihood that in the next 12 months also, Vedanta will ultimately outperform Nifty going ahead. So, I think, Santo, as much as the noise around the stock is quite negative, I think that is still not translating in the operating performance and may not even translate in the stock performance of the company. Well, the stock on my radar today would be Zee Entertainment. Decent bit of positive news coming out for the company. Finally, we all know that a new tariff order has been implemented, which was recommended by a TRAI, but there some bit of changes have been made in that new tariff order, for broadcasters. Now, the regulator has actually recommended that the minimum charge that channels can charge customers for including a new channel into a package has been raised to rupees 19 from rupees 12 earlier. So that is clearly a very strong positive as far as a broadcaster like Zee Entertainment is concerned. Apart from that, Nuvama Wealth came out with a view this morning indicating that they are expecting very, very strong ad sales growth in the second half of FY23, because if you look at the gross margins of some of the biggest advertisers in the country, which is the FMCG space, Santo, their gross margin have improved quite considerably in the second quarter, and Nuvama is expecting that improvement in profitability will translate to higher spending on promotional event. Also, a lot of FMCG companies are looking to launch good amount of products in the second half, also driven by the fact that winter is now here. So a lot of winter launches will happen, and therefore a lot of promotional events will happen, and that should aid revenue, sales revenue, which were struggling a little bit in the first half of FY23 for Zee Entertainment going ahead.
Well, on the margins, the new tariff order is definitely a positive for Zee Entertainment, but if you again look by the market reaction to the development, the stock is pretty much flat, which indicates that the market doesn't see any major upsides from this particular event. That's one. CJ, also at this point in time, let's not forget 50 to 55% of Zee's revenues comes mainly from advertising. Yeah. Now, the two major advertisers at this point, one is FMCG, the other is auto. Now, with FMCG companies, yes, they are getting the benefit of lower raw material prices that has significantly improved their margins, but what most companies at this point in time are trying to do is pass on the costs, pass on the benefits of the lower cost onto their consumers, yeah, and improve their market share. So, it is not as if because they are making money on the the profitability has gone up, they would like to spend more on advertisements and promotions at this stage. So, that is one. Secondly, in the case of auto companies also, if you see, they have reduced their advertising spend for one simple reason: they are unable to meet existing demand. Now, if existing demand itself is so high, why would you want more customers when you won't be able to deliver to them? So, this is a very big problem for not just Zee, but I would say for all media companies in general, that advertisers are seem to be in no mood to loosen their purse strings easily, at least in the short term, and that will definitely have an impact on Zee TV. Yes, its OTT platform is doing quite well, but let's again not forget that it's right now making losses, although the subscriber numbers have been pretty impressive there, that's still loss making at this point in time. And again, the company's CFO, during the last earnings call had mentioned that the outlook remains very cautious as far as advertising revenues go for the rest of the year. Although there has been some festive spending, the company management clearly said that they are seeing some headwinds in the third quarter as well. So, you are unlikely to see a big significant shift in revenues at this point in time, and that is what the market seems to be cautious about, and you can see that in the stock price movement at this point.
I think, Santo, one challenge for as far as advertisement is concerned is also been the base effect, because if you look at the base for second quarter as well as probably the third quarter as well of last year, I think a lot of the ad sales in those two quarters were actually driven by startups and cryptocurrency companies. Both of those are where they are at this point of time. Everybody knows, it's no secret, the fact that the funding crunch that startups are seeing, and of course the existential crisis that cryptocurrencies are seeing, I think both of those cash or ad cash is going away. I think that has really dented, and on top of that, in the first half of FY23, you saw even FMCG were the major staple of a lot of advertisement revenue. They also, tightening the purse strings around their wallets. So clearly, I think if you take that out, I think if you just focus on FMCG and automobile, I think there is hope for incremental improvement, but we'll have to wait and see whether that shows in the earnings of the companies going ahead.
Well, last talk on a watch list this morning, Siemens India. Now, decent set of fourth quarter numbers. Net profit has risen by 23% year on year, and revenues have gone up by 11%. More importantly, the order book inflow has also been pretty strong, close to about 4,000, a little over 4,000 crore of orders won during the quarter gone by, and the overall the backlog of order book at this point in time is about 17,000 odd crore. The company said that they are continuing to see capex spend by both private sector as well as public sector companies. Now, this was one of the big concerns for all capital goods players, whether the pace of capex would be sustained. We have seen now good numbers from ABB. Siemens too has come out with a similar picture, and the Siemens management has said that they are seeing more spends, particularly in the segments of digital and sustainability. Overall, it has been broad-based growth for Siemens. The stock has had a good run, and it's been consolidating for some time now, but near-term outlook, given that the order book order inflows remain quite strong and they are seeing traction across all segments, this is definitely a stock worth keeping an eye out for?
I think, Santo, that is true. I mean, if you look at the fundamental performance, clearly it's been very strong. But if you look at the stock performance, it's been very, very lackluster. In the past 3 months, the stock has fallen about 3%. So clearly not going anywhere at this point of time, probably caught in a no man's land. And if you look at some of the momentum indicators as well, they are also giving a very, very weak reading as far as Siemens India is concerned. RSI is struggling somewhere in the 41 to 42 range, really not providing any sort of confidence that the stock will see a breakout move anytime soon. And also, if you were to look at the consensus price target on the stock at this point of time, that is also indicating an upside of just 8% from current levels over the next 12 months. I don't think anybody in the market, Santo, at this point of time would be too attracted, by returns of that profile. So for me, I think this is a stock which has had a great run. Clearly, you can see that the stock has today fallen about 3%. It has had a great run. The earnings are now catching up. But as far as the outlook is concerned, I am not so sure. I share the optimism that the manager is indicating on the capex front. I believe Mint yesterday did a very interesting story about how cash flows of BSE 500 companies are actually struggling at this point of time. Operating cash flows are struggling, and generally that can be a good lead indicator that companies could be averse. If this trend continues, of course, in the third quarter as well, companies could actually be averse on spending too heavily on capital expenditure going ahead. So let's see if the management's view turns out to be right, or if the reality on the street turns out to be right. It remains to be seen. But I think those are my thoughts on Siemens India, Santo.
Well, and before we wrap, any queries?
Yes, Santo, I think a lot of people want our thoughts on a lot of stocks, but I think one stock, I think you could probably give a refresher, Santo, on this, and because you had talked about this on the show yesterday or day before yesterday, I think this is IGL. One of our viewers, Funny PG, wants our thoughts on Indraprastha Gas Limited.
Well, again, the same story here, because IGL caters to the non-commercial consumers, and demand for pipe gas and fuel CNG continue to remain high. This company should benefit in the longer term. What is hurting demand at this point in time clearly is high gas prices, and that is hurting the margins of IGL, not just IGL but also all city gas distribution companies. Of course, the gas companies which cater to the commercial segment are hurting even more. But that said, till you see a cooling of gas prices, I think the pressure on earnings will continue. So this is likely to be a slightly longer term play. Relief in the short term appears to be some way off. Of course, the stock is showing good strength. It had fallen below 400 some time back, but since then it has been consistently holding above that mark. But big upsides as long as gas prices remain high, that seems a little unlikely at this point.
Yeah, and Santo, you can see the stock, I mean, it's down about 1.5% again after falling about 3.5% yesterday. So clearly the market at this point of time is a little worried on Indraprastha Gas Limited. And on that note, shall we wrap up?
Yes, and thank you for writing in and also sharing your thoughts. Continue to do so, and we'll be happy to address any queries that you may have.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. Till then, have a spectacular trading day.